All right, let's get right into it. You know, every now and then, the stock market does something that just makes you stop and stare. Something that seems to defy all logic. Well, today, we're going to break down one of those moments. We're talking about the absolutely wild one-day ride of a company, cbdMD, ticker YCBD. We're going to be detectives here, sift through the data, and try to figure out what in the world was going on.
And this is the number at the very heart of our story, 94.5%. Now, that's not a gain over a year. It's not even over a month. That's what this stock did in one single day. So the question is, how on earth does a stock nearly double its value between the opening and closing bells?
And to put some real dollars and cents on that percentage, here you go. The stock kicks off the day at a mere 73 cents, and by the end, it's sitting at $1.42. I mean, the speed of that move is just staggering. And it makes you wonder, did the company's value actually double overnight, or was something else, something crazier at play?
Okay, so if we're going to investigate this, we have to start with the most obvious, most dramatic piece of evidence. This wasn't just about the price tag changing. It was about the sheer number of people who suddenly, desperately wanted in on the action. Let's look at the trading volume.
On that one day, nearly 182 million shares of this company changed hands. Now that's a huge number on its own, but a number like that is pretty much meaningless without some context.
And here's that context. And wow, the trading activity wasn't just a little high. It was 300 times its normal average day. So think about that. This wasn't a gentle little wave of buying interest. This was a tsunami. This is our first huge clue that this was an event driven by a massive, sudden stampede. Okay, so we've established there was a huge price surge on, frankly, unbelievable volume. But, you know, when we start to dig into the technical data, the clues get a lot murkier. It's kind of like we're interviewing witnesses at a crime scene, and they're all telling us slightly different and, in some cases, totally conflicting stories.
So our first witness is something called the Relative Strength Index, or RSI. All you really need to know is that it's a momentum gauge. It tells us how fast a stock's price is moving, and whether it's maybe moving too fast, too fast.
Probably the easiest way to think about it is as a hype meter. You know how a car has a red line on the tachometer? Well, the RSI has a red zone too, anything over 70. And that's a warning light. It suggests the excitement might be getting way ahead of reality, and we call that being overbought.
So what was YCBD's RSI? It was almost 80. Our hype meter wasn't just blinking red, it was screaming. That's a classic sign of just extreme, off-the-charts excitement. But it's also a huge red flag that a rally like this might be about to burn out.
And this is where the story gets really twisted. This quote from the analysis nails the contradiction. See, one indicator, the MACD, is saying, yep, momentum is super strong, full speed ahead. But another, more sensitive one, the Stochastic RSI, is at 100. That's its absolute max. It is screaming overbought as loud as it can. So is the stock strong, or is it totally exhausted? The data seems to be saying both.
Right, so all those indicators we just talked about, they're very short term. They measure what's happening right now. But a stock also has a long-term memory, and we can read that by looking at its moving averages.
And here we find another major conflict. The current price of $1.42 is miles above its recent short-term averages. That just confirms how powerful this recent blast-off was. But, and this is a big but, it's still way below its long-term 200-day average, which is hanging out way up at $1.94. Now that long-term average, it acts like a heavy ceiling, a massive point of resistance. So the stock just ran an incredible sprint, but it looks like it's heading straight for a brick wall.
So what we've got here is a classic technical tug-of-war. You've got this army of super optimistic buyers, the bulls, yanking with all their might in one direction, and then you have a whole set of powerful, flashing warning signs, the bears, pulling just as hard in the other. This right here is the central battle of our story.
I mean, look at this. It's a tale of two completely different data sets. In the bull corner, you've got that insane volume, powerful momentum, and just a fire hose of money pouring in. But in the bear corner, you've got these extreme overbought warnings and that giant wall of long-term resistance waiting up ahead. The data is literally telling us two opposite stories at the exact same time.
So let's just make the bullish case for a second. That 300 times increase in volume, that's not nothing. That shows an enormous crowd of people buying with some serious conviction. All the short-term signals are flashing bright green. The argument here is that maybe, just maybe, this isn't some random fluke. Maybe this is the start of a real, fundamental change for the company.
But then,
you've got the bearish case. And it basically says, hey, what goes up this fast usually comes down even faster. A stock trading this far above its normal trend is like a rubber band stretched to its absolute limit. It's bound to snap back. The overbought signs suggest the hype has just gotten out of control, and that resistance at 194 is a very real barrier. The bears are betting on one simple thing: gravity.
So, we have our crime scene. We have our clues. We have our conflicting witness reports. Based on everything we've looked at, the technical analysis really points to three main possibilities for where this stock goes next.
Okay, scenario 1, the bullish dream. The buying frenzy just keeps going, and the stock makes a run for that big resistance level at 194. Scenario 2, the bearish reality check. The hype dies down, people start to sell and take profits, and the price falls back to earth, maybe to around $1.20. And then there's scenario 3, which is basically a ceasefire. The bulls and bears fight to a draw, and the stock just chops around sideways while the market tries to figure out what just happened.
So what's the verdict? Well, the source analysis leans toward being cautious here. A move this extreme, with this many overbought signals flashing, usually ends in some kind of pullback or correction. But, and this is key, you just cannot ignore that 300x volume surge. That kind of buying power can change the rules, at least for a while, and it makes the final outcome really, really uncertain.
And this final quote from the analysis just sums up the whole puzzle perfectly. Right now, in this very short-term moment, the momentum is so powerful that it's actually easier for the stock to keep going up. But if you look out just a little bit further, the conditions are so stretched, so overextended, that a pullback feels almost inevitable. It's a total paradox.
And that really leaves us with the ultimate question, doesn't it? This isn't just about YCBD on one crazy day. It's about the challenge we all face when we have to make decisions with messy, incomplete, and often contradictory information. When all the signals are screaming at you, but they're screaming completely different things, which voice do you listen to? That's the real art behind the science of all this.